David with the London recap for Thursday. So as usual, I'll go over EU on the DAX and how I was seeing price action this morning. So swing is bullish in the daily in EU, strong swing low, weak swing high. Internal is bearish internal brick structure. So there is every possibility that that bearish internal trend continues. And as I keep emphasizing, the weekly is looking pretty bearish, right? There's every possibility, on the weekly we swept this high. We've had a bearish chalk. There's every possibility we see a move like that there, and that will obviously see the continuation of that bearish internal trend, right? So for that reason, I am favouring price at least taking out this low. All right, I just think it's very likely that this bearish internal trend would at least continue to take out these equal lows here, right? Now we were reacting to this minor demand. You can see we had a pretty corrective pullback, and then yesterday we had that bearish candle closure. I think now it's very likely that we've mitigated the internal range. We reacted to demand. And now I think it's very likely we will see that move where we will run these lows and these lows. So favouring sells based on the daily, right? Now if we look at the 4 hour, so 4 hour swing is bullish, strong swing low, weak swing high. Internal is technically bullish as well, strong internal low, weak internal high. But as I said, based on the daily, I'm anticipating price running all these lows, right? Because you can see here how pronounced we've equal lows here, we've trend line liquidity there. There's lots of liquidity behind these lows. The most likely scenario is the price at least runs this low, right? So we had this corrective pullback from the 4 hour demand. Again, we were looking at that on the daily, and as you can see on the 4 hour, we've a bit more price action to work with, right? We had a bearish shock, pull back into the range, and then following FOMC yesterday, we pushed down. So we have that bearish shift, supply being respected, equal lows to target. We pull back into this 4 hour supply. Based on that there, sells are the high probability play, right? Again, built from the weekly right down to the 4 hour, lining everything up and understand, when structure shifts. And now I think it's very likely that we're going to run these lows. So massively favouring sells in line with that on the M15. Now, if we look at the M15, so we'll use bar replay here. So M15 swing bearish, strong swing high, weak swing low. I reset the internal here. We had this aggressive push down following FOMC last night, so I reset the internal and was just focusing on these pullbacks because having my internal here, it's pretty much the same as a swing. It doesn't really give me too much additional information, right? So swing bearish, internal bullish. Key detail: we've pulled back to the premium of the range. We've mitigated 4 hour supply at the grey box, and we've mitigated this M15 flip zone, which again is high probability supply because it led to this break structure, right? So every possibility that the bearish swing trend continues following this mitigation, right? And that fits with the 4 hour shock as well. So definitely favouring sells here. Can you look for buys from within this range? You can, but key detail is this lower probability because again, what do we expect? We expect price to pull back to the premium of the swing range before continuing, right? Lower. We have mitigated the premium of the range. We've mitigated the 4 hour supply. It's just much more aggressive buy-in from here. You just have to accept that. You can see here we had a pretty aggressive push up and a pretty corrective pullback. There is every possibility that we could come up and at least take this high. So again, maybe that is a risk you want to take if you want to be a bit more aggressive. That could happen, but you just have to accept and understand why it is lower probability, right? So personally, all I was looking for was sells here. Wouldn't have been interested in these buys at all. Now, in terms of looking for sells here, the ideal scenario would have been for price to come up, sweep this high, and then to get a bearish M15 shock and look for sells following that. That would have been the ideal scenario, right? You can see we had this very sideways pullback. No real interest in trying to trade that. It could play out, but you want to see sort of a bit of momentum, right? You don't want to be just trading a corrective pullback like that there. So ideal scenario is a sweep of this high and a bearish M15 order flow shift to look for sells. Now, as you can see, just kept pushing lower here. You can see supply is being respected here. So, theoretically, it could be aggressive and look for sells. We are coming off this supply mitigation inside the 4 hour supply. So, this could continue, right? But it's just not, there's not a lot of momentum. It's just not sort of price action. Technically it's valid, but it's not a high probability trade by any means, right? Now we come into this zone, so you could be looking for an entry here. There is an LC2A here, where you can see we had the bullish chalk, and then we liquidated the low. So this was the entry. Would have been tagged in, ran a decent bit of profit, but then you would have been stopped out, right? If you waited for confirmation entry there in the M2, you would have avoided the loss because there was no bullish chalk, right? So again, lower probability. You have to understand why it is lower probability and accept those risks, right? Now, seeing how this formed, right, with that aggressive push up and the corrective pullback, that did suggest that there was maybe a slightly higher probability that we could come up and take this high, but it's just lower probability because of what you're trading against, right? Now, start to push higher here. Did get a bullish M15 chalk, which again, if you were inclined to look for buys, you could be looking for, you know, an entry here. There's no very obvious engulfed single candle pivot within this range. Most of it's already mitigated. So personally, how I would have drawn the zone in this case is just the take the last buy before, or the last sell before the buy, and that sort of incorporates a lot of the wicks within here as well. So that would have been personally how I approached that, but it's not the best POI I've ever seen in my life. And as you can see, started to pull back into it, but there was no entry during London, so nothing to really see there. And you have to remember what we're coming from here, right? 4-hour supply mitigation, M15 supply mitigation. While this has been corrective, it would not be a massive surprise to see this be like a strong liquidation, and then for that to be the catalyst for price to start aggressively breaking lower. So yeah, sells were by far and away the higher probability play. As you know, built that from the weekly down to the 4-hour, we just didn't really see the price action on the M15 to capitalize on it. Could have looked for the aggressive buy, but again, just not a massive fan of buying against that higher time frame bias. Again, it's not invalid, you know, it's not wrong, but you just have to understand that it is lower probability and accept that you're more likely to take a loss there. So yeah, there was that LC2A, but you know, nothing in terms of looking for sells that I would really have wanted to trade there. So that was EU. Pretty interesting price action from the higher time frame down there. Just the M15 didn't play ball. Now, if we look at the DAX was a bit tricky today. I just don't have that strong of a conviction in a direction of bias. So whenever that's the case, I'm usually much more conservative in the M15, right? So swing, we know overall are bullish. Strong swing low, weak swing high. Swept this high and obviously had this pullback. If we look at the most recent price action, we had this bullish chalk, right? And then we pulled back into the demand and we tried to put in a new high. Obviously failed to close above there, which was not ideal. I was favouring buys from just within this range because again, there was no clear bear shift, right? I was thinking we could just pull back in here and keep pushing higher. But as you can see, we sort of, for the last few days, we've had reactions, but we just keep pushing lower, right? So the more times price sort of mitigates a range, and you know, if you take this whole range here, the more times price sort of mitigates a range and keeps push and fails to follow through, the higher the probability that it's going to fail. So again, no real clear higher time frame bias based on the daily. I'm aware we could push higher, we could push lower, don't really know which way it's going to go. So again, when price actions like this, I sit on my hands for the most part, right? Unless I see something absolutely pristine on the M15, I usually just stay out of the market. And again, very important to emphasize, don't force your bias on price action, right? You know, a lot of people, they want to trade every day, they want to reach their goals as quickly as possible, and they end up forcing bad trades in bad conditions, right? And they end up in drawdown. Being able to just say, no, there's nothing clear here, I'm just going to sit and wait for the clear price action to come. That is a superpower in trading, and again, it's something a lot of people struggle to do because a lot of being a good trader is being able to wait patiently, right? And that is very counterintuitive because again, in most other endeavors in life, you get paid for action, right? You know, if you're working your job, whatever it is, say you're an accountant, you don't get paid to sit there and wait for the optimal conditions to do a set of accounts. You get paid to work. Whereas trading's different. Trading, you often get rewarded for actually doing nothing. And it's very, very, very important to understand that. And again, it's very counterintuitive. So it is something that, you know, it takes a bit of time to get your head around. Now, 4-hour swing is bullish, strong swing low, weak swing high. Internal is technically bullish as well. This is the bullish internal break structure. But again, not the most convincing internal break structure, right? It's just, we struggled to close above the high, swapped it initially, and then eventually did close above, but could easily be a sweep liquidity, right? Now, initially, I was looking for buys sort of in this area, but as you can see, we tried to push higher, but we just kept grinding lower. So this could go either way. The 4-hour order flow is very clearly bearish. You can see we had this push down yesterday, we pulled back into supply. The most likely scenario based in the 4-hour is that, inflection point to inflection point, we've bearish order flow, we've mitigated this supply. Most likely scenario is that we take out this low. So if I had to pick a directional bias for the session, it would have been for price to take out this low. Right, so just keep it simple, not thinking too many steps ahead, just inflection point, supply to the week low. Yeah, so that would have been what I was favouring in the 4-hour, but it's not that clean. So important to keep that in mind. So favouring sells on the 4-hour. How is the M15 looking relative to the 4-hour? Well, favouring sells in the 4-hour, but M15 swing is bullish, strong swing low, weak swing high, and internal was bullish here as well. So swing and internal bullish in the M15, which is obviously counter to our bearish bias in the 4-hour. So not ideal. If we look at the M15 now, how we were looking coming into session, right? So we'd mitigated our 4-hour supply, we'd mitigated M15 supply within it, we'd had a bearish chalk, and we had pushed down quite aggressively. So even though M15 swing and internal are bullish here, I would actually be favouring sells. Again, just based on the 4-hour. And this is where the 4-hour cuts out a lot of the noise, right? This was very volatile price action because it was formed by FOMC. So we have some structure here that isn't visible on the 4-hour. On the 4-hour, this is just a straight push down and a pullback in a supply. So again, the logical thing is to anticipate this low getting run. So that would have been what I would have been favouring if I was, when looking to trade this. Now, we were reacting to this supply here. Again, this was, it was a bit of a straight push, no inducement, and we did have this zone behind. So yeah, favouring sells here. Usually how I approach this is I just wait for, supply to form during session. So I just wanted to see, how price action developed. Now, as you can see, coming in session, start to push higher here, right? Now, you can, maybe if you're focusing on the M15 and you're sort of ignoring the 4-hour, you could be looking for a buy from here. Look for sales. Again, M15 swing and internal are bullish. So these are technically phase A, but in my opinion, they're very low probability. And the reason why they're low probability is because we understand we've mitigated this 4-hour supply, right? So personally, no interest in looking for buys from here. In terms of looking for sells from here, the POI, it was formed overnight. It's overall my directional bias was not clear. Generally, I just wait for a POI to form during session. So personally, I wouldn't have been looking for an entry from here. But as you can see, we mitigate it. Now this is where you can drop down to your execution time frame, right? Wouldn't be a huge fan of using an LCM here because it's quite a big range, right? And I think in any case, yeah, all of the lid on PBID was invalidated on it. So there's no LCM there on it. Now, again, if you're not sure, if you don't have a massively strong conviction in your directional bias, you're not sure, and you don't feel comfortable taking an LCM, this is where you can wait for a confirmation entry, right? And as you can see here, we got our M5 chalk. So you could be looking at this here and saying, right, I want to take the M5 CE. Again, the negative confluence here is that you're trading against this valid M15 demand. So it was possible that we mitigated this here and kept pushing higher. So this was far from a pristine entry, but it was technically valid. And as you can see, pulled back into it, and it did play out. It ran for 5-hour. It just wasn't that clean. The fact we had mitigated the M15 demand, we could easily have, mitigated this here and kept pushing higher. But as you can see, it played out. Now, the ideal scenario to get involved in buys here would have been after we got the M15 chalk here. So this is the point where order flow is aligned, right? We have this flip. The whole range is on mitigated, right? This would have been the ideal area to be looking for an entry. Pull back in here, look for sales. This would have been the trade for me. But as you can see, we haven't mitigated it yet. So yeah, slightly tricky price action, conflicting signals in the M15 and the 4-hour. Favouring sells because of the 4-hour, but the M15 wasn't really aligned with that. By the time you waited for the order flow to shift in your favour, it didn't give an entry. So not really a lot you could have done there unless you took the 5CE there. But again, you can see, we broke out of that range quite impulsively, pulled back into the demand. Price could easily have pushed higher from there. So the fact that that demand was mitigated before the CE was tagged just makes it much lower probability, right? So that's that, guys. Any questions, hit me up in Discord and I'll chat to you soon. Goodbye.